All of the Magnificent 7 stocks are down year to date. So now some are flat, some are down double digits, some are even flirting with bear market territory. But I believe one of them will outperform the rest. And today, I'm breaking down what's actually happening, why investors are getting this wrong, and how I'm positioning my capital long term. Now here's what we're going to cover. What this company is and why it dominates, why it's down big this year, and how I'm positioning long term in the leverage play I'm using. So before we start, this is not financial advice. I'm sharing my perspective for educational purposes only. Now, this is your boy Dre, your investing engineer, and here at Money Mind Resources, we focus on engineering wealth into portfolios through discipline, strategy, and long-term positioning. And one of our pillars is what? Wealth building. And that's exactly what this company is all about. Now, if this breakdown adds value, help me get this video to 100 likes. That tells the algorithm that this kind of content matters. So boy, it's been a rough start to the year for the Magnificent 7. Technology as a sector been getting punished. Meanwhile, defensive sectors like energy, consumer staples have led. If we look a bit deeper into technology, let's say software, some are down 30%. Some are down over 50% from its most recent highs. So naturally, retail investors start thinking, tech is done. And I believe that's where people are getting things wrong. Because this isn't about tech being dead. It's about rotation. Now, the company we want to look at today and put the focus on is Microsoft. One of the most dominant broad-based technology providers in the world, with over 73% desktop operating system market share. Microsoft comprises of Microsoft 365, which is a global productivity standard. They also have their cloud computing platform, Azure, roughly 25% of the cloud market share, only behind Amazon's AWS. See, Microsoft just reported earnings for fiscal year 2025, and their revenue brought in $281 billion. The three main business segments is productivity and business processes, intelligent cloud, and personal computing. Azure continues to grow double digit. They are doing massive data center expansion, and their integration within enterprise systems is deep. We all know that Microsoft has been around and well ingrained in our everyday operation. What that creates is switching costs, sticky enterprise clients, recurring high margin revenue. This isn't a startup company. This is infrastructure. So why is it down? Well, two main reasons. And the first one is where most retail investors are misreading the situation. But I'm gonna help you out. So first we have AI disruption fear. Anthropic and other LLMs or players have triggered headlines. The fear? Well, that AI will disrupt traditional enterprise software. You're looking at finance, law, coding, and even Microsoft. This is a mistake retail investors are making. They're assuming AI will replace Microsoft tools, but let me simplify. AI won't invent a new way to heat food. It will use the microwave that already exists. So AI won't replace Microsoft. It will sit inside Microsoft and ensure that Microsoft is being used to the best of its capabilities. Now, second, margin pressure. Microsoft guided for 15 to 17% revenue growth. That's strong. But operating margins are expected to dip slightly. Now, why? Because they're aggressively investing in AI infrastructure. And markets hate margin compressions in the short term. But long-term investors understand investment today means cash flow dominance tomorrow. This is my thesis. Capital rotates. At the start of the year, software was punished. Then semiconductors led. Then industrials, then energy. But when rotation completes, quality software names get repriced upward. And when that rotation comes back into software, Microsoft will likely be a major beneficiary. Full transparency, when Microsoft was trading near around $500, I told the community that if it broke below $491, we're likely heading to about $401. And we saw exactly that happen. That's not hype. That's market structure. Now at these levels, I've added more shares, for sure. I had to. It's a big discount. And I also started a position in June 2027 450 calls. Why? Because I already own the stock. So I'm adding control leverage to amplify the upside. Win or lose, I'll update you. And this is important. Leverage without ownership is gambling. Leverage on top of ownership is strategy. If you're holding Microsoft through this, comment holding. And if you're risk off right now, comment risk off. I want to have that discussion and know what others are doing. If you want deeper breakdowns like this weekly, including price zones, option positioning, and sector rotation, that's exactly what we do inside Money Mind Resources. The link is in the description.